Hi guys, welcome back to this week Technical Insights. Singapore stocks ended lower on Friday, 24th of November, amid a mixed trading session in the Asia Pacific region. Our Straits Times Index fell 0.54% or 16 points to 3,094 points. Only 4 counters in our benchmark index ended higher on Friday. Out of the 4, 3 of them were real estate investment trust counter. Fraser Logistics and Commercial Trust led the index gainer, with its units gaining 0.91% to close at $1.11. Meanwhile, DFI Retail Group ended at the bottom of the index performance table, falling 2.62% to close at US $2.23. Trading volume was low on the broader Singapore market, with losers outnumbering winners 331 to 248. About 659 million shares worth 517 million Sing dollars were traded. Across the Asia Pacific region, Japan Nikkei 225 index was the best performer, up 0.52%. Shanghai Composite Index was down 0.68%. Hong Kong Hang Seng Index was the biggest loser, sliding 1.96%. 31 out of the 80 Hong Kong Hang Seng Index members have released their earnings reports for the third quarter, generating an average 6.5% growth from a year earlier, according to Bloomberg data. These results have so far surprised 7.2% towards the downside. Technology companies like Alibaba and Chinese banks were the biggest culprits. The Hang Seng Index slumped 11% so far this year, the worst performer among global major benchmarks. Overseas traders pulled out of the Chinese and Hong Kong stocks on concerns about the strength of China's economic recovery amid the property crisis. For the week, all 3 major US indices notched their 4th straight consecutive week of gains. The Dow Jones Index was the top performer among the 3, adding 1.27% to close at 35,390 points, while the S&P 500 also advanced about 1% to end at 4,559 points. Tech-heavy Nasdaq also rose 0.89% for the week to finish at 14,250 points. This gain comes as Treasury yield this week hit multiple months low on hope that inflation is cooling and the Federal Reserve may be done with rising rates. The US 10-year benchmark rates were also up 6 basis points on Friday to around 4.476%. This signals to us that the market is coming to terms with the 4 to 5% interest rate is the right level for next year 2024 across the curve, and the equity market can handle that. In Asia, the CSI 300 index was down by 0.84% for the week to 3,538 points. The Hang Seng Index also managed to eke out a gain for the week, up 0.6% to close at 17,559 points. On our local front, our STI Index lost 0.96% to close at 3,094 points, resuming the downtrend, and was unable to build on the 0.58% gain that we saw last week. Locally, our 3 banks turned in a negative performance. DBS was the biggest loser, falling almost 2.66% for the week to close at $31.82. UOB also lost 0.22% to close at $27.29. OCBC tumbled 2.31% to close at $12.67. SGX, however, bucked the trend among the 3 banks and was up 0.1% to close at $9.55. This was after falling 1.75% last week. The biggest winner for this week was Fraser Logistics and Commercial Trust, which was up 2.78% for the week to close at $1.11, while ST Engineering was the biggest loser, down 3.1% to close at $3.75. So for this week's technical analysis, we will be looking at both Fraser Logistics Commercial Trust as well as ST Engineering. First, let's take a look at Fraser Logistics and Commercial Trust. The Real Estate Investment Trust, or REIT, had a positive week, rising 2.78%. This is the second consecutive winning week after gaining 2.86% last week. The REIT year-to-date high was seen on 3rd of February at $1.30, and the year-to-date low was seen at the end of October at 96.5 cents. For the first half of the year, the REIT was pretty much in a range-bound kind of trading between the year-to-date high of $1.30 and the 13 March low of $1.13. In July, the prices broke out of this range-bound pattern into a downtrend, after the formation of a triple top formation during the 5th of June and the 20th July period at $1.26, forming a series of lower highs and lower lows. Last month in October, the price seems to have bottomed out at the year-to-date low at 96.5 cents. The MACD indicator is currently showing positive signs in the prices as the trajectory of both the MACD line and the signal line are both trending upwards with a healthy gap between them, meaning that the uptrend momentum is still pretty strong. The RSI crossed above the 50-point neutral mark somewhere in early November, signaling the start of the uptrend that we are currently observing. The latest reading on the RSI is 62, which is in the healthy range and show that the uptrend momentum is still strong. On top of that, we are also seeing that the RSI is still some distance away from the 70-point overbought mark, signaling that there could still be more upside to come for Fraser Logistics and Commercial Trust. With both the indicators confirming that the uptrend is likely to continue, the first target resistance level that we are looking at will be the 200 days moving average, which is the red line that you see here at $1.16, which was also the high on 31st of August. Breaking above this 200 days moving average in red, the price may retest the triple top formation that you observed during the June and July period at $1.26, which is a level that we expect strong sellings to come in again. For entry and support level, traders may look at the 20 days moving average in white at $1.04 or the 50 days moving average in yellow at $1.06, both of which is expected to provide some support for the current uptrend to continue. Next, let's have a look at ST Engineering. ST Engineering was down 3.1% last week to close at $3.75. We covered ST Engineering during the 16th October video and cautioned traders to watch out for a pullback and a change in momentum from both the MACD indicator as well as the RSI indicator. The comment that was made then was a more conservative approach will be to wait for a pullback towards the 50 days moving average, which is the yellow line that you see here, and reassess if the indicators are still in line with the primary trend that we observed before joining the uptrend from there. Fast forward a month later to now, we see that ST Engineering is trending in a consolidation formation, just below its 50 days moving average of $3.83. Last Friday closing of $3.75 was 8 cents below the 50 days moving average. The long-term uptrend connecting the low of October last year as well as the low of March this year is still pretty much intact and not breached at the moment. The MACD indicator is now in negative territory, and the MACD line breached below the signal line last week, showing that there's negative momentum in the share price right now. The latest RSI reading on Friday was 42, below the 50-point neutral mark, indicating that momentum is very weak right now. So with both the indicators not showing any positive sign, the current trend of consolidation is likely to continue. To trade this range-bound kind of formation, traders may consider the lower bound of the Bollinger Band, which is the white line that you see here, at $3.71, and the 200 days moving average in red, which is at $3.65, for possible level of support and entry to target the upper bound of the Bollinger Band at $3.89. And that's all I have for this week update. As usual, if you do find this video useful, we appreciate your support by giving us a like or a share and hit that subscribe button to stay up to date to our latest content. And I'll see you again next week in the next Technical Insights.